Hi there and welcome to Money Talks, where we take a look at the rural economy as it affects you in the ag sector. In this edition, the big meat company merger, fact or fantasy? Who wins? Who loses? Who cares? The wool industry goes royal and goes shopping for $65 million for Wool Partners Co-op. And is this golden goose shining even brighter? Good times ahead for kiwi fruit growers, especially the ones harvesting gold. All this and plenty more, but first, U.S. equity markets have been up slightly over the past week, although nothing too spectacular. Here to tell us all about it is ASB rural economist James Shortall. James, welcome back to the show.
Good to be here once again.
Now tell me about the equity markets. Nothing to write home about.
Yeah, they've been pretty mild over the past week, and there's been a lot of talk leading up into the G20 meeting, which was over the weekend, and we're into the third quarter earnings season for a lot of US companies, and of the companies that have released their earnings, and 85% of them have actually beaten the market expectations. So it's been a pretty good earnings season, but equity markets have been still pretty mild.
Now McDonald's is one outfit that everybody watches. What's the picture they're telling us?
Yeah, well, I like to look at what McDonald's are doing and how they're earning money, because it is quite important to us here in New Zealand. Our beef sector sends a lot of beef that is mixed into burgers, and of course, you know, it's a good indicator for food service in the US and for the global economy. And they did announce earnings that was better than market expectations. I've seen sales growth in all of their markets, but they have also indicated that just recently that they're going to have to increase some of their prices because commodity prices have increased for them, and they're going to see a bit of a squeeze on their margins. So that's interesting. I think in general through this year we've seen high commodity prices for all food items.
Now the US dollar's been back in favour slightly. Are we seeing any changes there?
Well, I guess probably over the past day, then the US dollar has been back in favour. But, you know, when we look at the Kiwi, then, you know, we've been really trading over 75 cents. A few days we've been under 75. On Wednesday morning we're sort of 74.5. But the US dollar has been in favour. But just really with the question marks around the G20 meeting and what outcomes that might have in terms of the currency, and a lot of countries sort of talking about you know, anti-competitive behaviour, I guess, in currency markets. So the US dollar has been in favour when there's a little bit of risk averseness out there, which there has been. Then you know, we see a little bit more strength. And
James, the Kiwi dollar has fallen to its lowest point against the Aussie dollar in what, almost a decade?
Yeah, I mean, the Aussie dollar is strong against everyone. I mean, the Aussie was, of course, hit parity against the US. It's currently sort of trading around 99 cents. But you know, really, when we're matched up against the Australian economy, then they're well in front of us right now, and that reflects the currency as well. That's why we're weak against the Australian dollar. Their interest rates are higher. Their economy is steaming ahead stronger. Their employment figures are much stronger than ours. So for all of those reasons, then the Australian economy and you know, investment is looking a little better across the Tasman. And
we're down against the euro.
Yeah, against the euro, down a little bit. The euro's actually been in favour against most of the global currencies, also against the US dollar. We've started to come back a little bit more into fundamentals with the global economy. Currency markets have been fairly low in terms of volatility, in terms of volume at least, and it's coming back to economic fundamentals. The Europeans have got their issues, but relative to the US, and they're looking a little bit stronger.
Now let's talk dairy, of course, ever important to New Zealand. What are you picking for the payout forecast? Because the market's still looking pretty firm.
Yeah, well, to be honest, right through this season, we've been a little bit cautious about the payout, about where we're forecasting. We've seen so much volatility with international commodity prices up and down all over the show. And we saw a dip through the middle of the year, but now they've come back up and stabilised. So we've been pretty cautious, sort of predicting in the low $6 range for a milk price. But now that we're starting to see prices really stabilise at these sort of $3,500 US dollars per tonne for whole milk powder, then you know, we're comfortable that we're going to start to see things lift. And the longer we see prices hold at these current levels, the better it is for the milk price. So we've actually we've lifted our milk price forecast to $6.70, and once you include sort of the shareholder dividends, then we're talking like a payout to farmers well over $7, which, you know, in context is the second highest on record.
Talking about payouts, and intrigued to see that Andrew Ferrier at Fonterra is now making $5.1 million. The guy rakes in $100,000 a week. Is he worth it?
Well, I don't know. I haven't,
maybe he'll adopt us.
Maybe we need to get him on here and have a talk to him. But that certainly is big money, and I guess you know, it's hard to comment on the worthiness of that. But I guess Fonterra is a large global company, and you know, there's a lot of people overseas that are earning big money also.
Yeah, but intriguing. He joined, I think it was in 2003, at something like just over $1 million. Now he's up to 5.1. Those are pretty good innings by anybody, aren't they?
Yeah, I mean, if we all had that sort of earnings increases, then it would be nice.
Maybe he wants to make The Hobbit. What do you think?
True.
We'll go to him. After the break, an update on that G20 finance ministers meeting in Seoul, South Korea, and what it means for global finance and for currency markets. And the Serious Fraud Office investigates Natural Dairy Holdings and UBNZ over that proposed sale and purchase of the Crafer Farms. Plus, much more. But first, answer this in our Farmers' Facts and Figures quiz. How much will the government pay to make land across Canterbury safe again in the wake of the devastating earthquake? The answer right after the break. Stay with us. Welcome back to Money Talks. Just before the break, we asked you, how much will the government pay to make land across Canterbury safe again in the wake of the devastating earthquake? The answer, up to $200 million. Well, that's small change to the 20 world finance leaders who are going to meet at the G20 summit in South Korea in November. The international currency war between the U.S. and China has seen the greenback strengthen against our dollar, a situation that the government and the Reserve Bank say they're powerless to stop. It's a big worry for our agricultural exporters, with some of the advantages of strong commodity prices surely to be lost. At the Korea meeting, it's all about the global economy as it emerges from the financial crisis. Joining us now is KPMG partner in Agribusiness Ian Proudfoot. Are the leaders likely to reduce market volatility? What are you picking, Ian?
No. Simple answer to that question. I just can't see how they can reduce volatility. They can do a lot of talking and they can put some policy statements out. But there's some fundamental issues in the economy at the moment. The amount of cash sitting in China, the high level of indebtedness in the United States. And I don't believe a meeting can solve those problems. I think it needs the Chinese to take a bold step in opening up their economy, and I don't believe they've got any desire to do that. I think they're now trying to work out how to get the domestic economy working and face a new reality where they're not purely just an export engine, because some of those companies that have exported from China are now moving offshore. So they've got some issues themselves they're working through as well.
Ian, it's fascinating that this is the first time that it's being held in a place like Korea. What does that say to you?
Well, it says to me there's a very clear message. The economy is moving east. The power in the world economy is no longer centred in the US. It is definitely, there's a trend to Asia. And it's very interesting they've chosen Korea. And I think that probably reflects some of the sensitivities we're seeing at the moment in Japan and Korea in particular around the focus being placed on China. Yet they've still got very strong economies, very large economies, and they want to have that recognised. Yeah,
but neither of those economies are as strong as China's at the moment. James, what do you make of that?
Yeah, I mean, I think we hear a lot of, over this past few weeks, and we've heard a lot of talk about you know, some of the power moving to these different areas. We talk about the BRIC economies, that's Brazil, Russia, India and China, and they've been really lobbying to get more power in the G20 and in terms of decision making, that sort of thing, and we are seeing a lot more of that happen. So, you know, there's also a lot of power going to Asia, but also, you know, the Russians and the Brazilians are also major powerhouses, and they're going to have more influence down the track. I think, you know, we're seeing a sort of a trend that is heading towards some of these developing economies.
You know, it's interesting, the G20 represents, what, 85% of the world economy, and yet for the first time at this meeting, we're seeing the World Bank, the IMF, International Monetary Fund. What's this mean?
I think what we're seeing is there's a recognition we've got a global issue that needs to be fixed, and the 20 countries, they're focused on their own economies, so they're not necessarily focused on the wider global economic environment, and particularly some of the smaller developing countries. Getting people like the World Bank and the IMF around the table probably brings some other perspectives to the table that I think maybe will placate some of the people that have campaigned against the G20 and have said that it's very focused on purely the large top of town and actually trying to make a global business solution. So I think it's a positive sign.
I think there's also getting these other organisations involved in their key stakeholders, I guess, now in the global economy. When you've got the IMF, then they've gone out and, you know, provided a bailout, I guess, to Greece. They're also involved in the European situation. If there's other issues around the world, then they're going to be expected to come in. So, you know, I think it's, you know, they're a key stakeholder in the global economy, where things are going, what decisions are made. They want to be involved.
And the IMF, interesting, is going to have even greater surveillance powers than they've had in the past. What sorts of things will they be watching for, Ian?
I think they'll be looking very much at the proactive measures, how economies are tracking, trying to avoid situations arising such as we're seeing in the pigs, Portugal, Italy, Greece and Spain, trying to identify those factors and get governments to change their policies early. And, you know, we've already seen that in the last week with some of the dramatic steps taken by the British government to really cut the cloth to match the amount of money. So those sort of messages will be coming through to the IMF to other governments loud and clear, I would think. I wouldn't be surprised if New Zealand gets one as well. Really?
We need it here in New Zealand?
I think...
Because we're told by the powers that be that we're doing pretty well here compared to the rest of the world.
I don't know the precise numbers, but we're borrowing $200 million a week or whatever. We can't keep borrowing that sort of money indefinitely. So, you know, the government does need to cut the cloth at some point, and a bit of an austerity budget will probably come around. Maybe not the next budget, the budget after.
Yeah, I think there's a real trend towards going risk mitigation and identifying risks, mitigating them, and making sure they don't come back again. And I guess there's a lot of economies around the world. The IMF will be trying to do those sorts of things to identify the risks in economies, in finance sectors, banking regulations, all of those sorts of things. We're already seeing them with the Basel III regulations coming through. And, you know, if one country, you know, if for New Zealand, then we've got to identify risks within our economy just to match up with those other countries that are doing the same sort of thing. It's very similar in the banking industry. You know, if we don't follow the global rules, then we're not part of that environment. So it's a dangerous game to play. So
we're not out of the woods yet, Ian.
The global economy. Personal view is I think we're probably on the precipice of the second dip. I don't think it's going to be as severe a dip as we've seen. I know James, the Economist population, is probably saying something different. The people I'm talking to out doing business on a day-to-day basis are finding life bloody tough at the moment, and I can only see that they don't see an up in the next 12 months. So I think reality is, no, we've still got some hard yards to go.
Let's talk